This is David Frost with another example of a gap fill scenario on CitiGroup. Now on this one we had a gap left open at 51.13 right in this zone here, and the stock traded away from it all the way up to 54 and change and then came back down. Now in the course I show you precisely why this became a higher risk play even though it worked out. And you can see here the stock only pierced that level by a couple of pennies. 51.08 was the low. So we only pierced it by 5 cents. And then the stock took off to the upside. And also in the course, I show you exactly how you can utilize this type of strategy for a two-step trade. One would be a scalp trade. And the second half of the trade, you would be able to squeeze out as much of the profit for the rest of the day as possible, while keeping your risk to actually zero. On a trade like this though, you need to understand where your risk is, and in the course I show you precisely why and where this became a higher risk play, even though it worked out anyway. So I wanted to show you the gap fill of a long trade on CitiGroup, and on this one you can see by the end of the day you would have gotten about a 1% bounce off of the entry point of 51.13, or 68 cents between the entry point and the close of the day. So that's a nice bounce. At minimum, it's a nice scalp trade. This was another example of a long play on CitiGroup off of a gap fill. In my course, I teach you exactly how to do this day in and day out, both the morning gap trades and the gap fill trades. I teach you how to build a list. I teach you what you're looking for. I teach you where the high risk plays are and where the low risk plays are. And I also teach you which stocks this works the best on. So hopefully you enjoy this little 2-minute session on CitiGroup.